Hello traders, John Hyaden here with a daily revision. Let us begin. Before we start, I suggest you stop the video and read the general risk warning. It is very important for you to understand the risks under trading. Like always, we will start with upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcements. Today's focus will be mainly on the dollar, which almost 6 announcements with strong influence related to the dollar will take place during the day. High volatility is expected among its pairs following the positive close yesterday and the great opening today due to some good data from China. The upward trend should continue for the dollar. You can see as well the Fed Chair Yellen will speak today. Of course, he will have a lot of influence on the rhythm for the day. The Japanese yen monetary policy meeting minutes is expected to show some of Japan's concern over weak prices. This can be a great opportunity for us to trade the dollar yen, the pair of course, since the dollar is getting strong and the yen is expected to fall. Therefore, call options on the pair will be a very good advice. US market, great trading session for Wall Street yesterday. The S&P 500 finished higher by 0.27% and Dow Jones by 0.5%. The small steps toward higher highs represent the optimistic feeling traders go through now. However, when the steps get smaller and smaller, it basically shows us that the big money is scared to enter the markets since it cannot just go up without any correction. And when I mean smaller steps, I mean we will see every day there is a small percentage of higher highs. According to analysts, it was pretty obvious to see that the end of the year rally will take place and no one would miss the chance. However, things get more complex and intense as we climb higher without seeing traders pulling their profits. This eventually will lead to some pretty heavy days of big red drops. So in conclusion, the trend should keep its upward movement at least until Friday when the unemployment rate and non-farm payrolls will take place. Until then, short-term trades will be a good advice. As you can see here in the graph below, this is the S&P 500 daily chart, and I want you to see that we broke here the first resistance in yellow, we climbed higher, we broke the second resistance, and now you can't see the previous one, but we are just got hit by the last resistance. And look at the struggle. If we're looking backward, we can see 4 or 5 days of big red drops, which goes over almost 100 days of trying to climb and reach the higher place we were 3 months ago. So we should not see a breakout here. It will be too hard for the market to break it. But I think that if we will see an interest rate decision in favor with the Fed, which means higher interest rate, we should see the market drop really hard, and that's exactly the place and the point which the market can drop. So it's a bit riskier now to enter trades related, of course, to stocks, but if you're willing to do it, then short ones will be better. Earning reports. We are still in the middle of the third quarter report session. Here I will keep you updated with important events. These reports will either help the market to reach higher highs or it will cause hard time for traders to set a direction. Today earning reports will focus on companies such Kim, Allergen, and which is ANG, Michael Kors. Their reports may help setting a stronger rhythm today. However, the greater influence will be from the dollar reports during the day and of course Janet Yellen's speech. If you want to see who is reporting every day, you can write on Google Earning Report Calendar. He will bring up detailed charts with upcoming events. Moving on to commodities. Gold. Gold is out of the picture for a rebound on the support level after it broke down the $1,131 per ounce, heading towards the next support, which is in 1,104. Now that we know its direction, analysts predict we can trade in favor with the seller at least until this support level. The reason for the crash comes from the announcements on Friday, which may have the greatest influence till now on the interest rate decision in December. As you can see in the graphs below, from the left, that was yesterday gold's daily chart. We were exactly on the support area, the 100 moving average. You can see here the line in blue. And today we broke hardly, sorry, it was yesterday actually that we broke hardly the resistance level, and we should see the movement at least until the yellow support level I marked down here, and therefore put option on the gold will be a great advice according to analysts. Crude oil, high gains for the commodity after yesterday API weekly crude oil report, which made the price of oil surge by almost 4%. It was a remarkable day for the crude oil, which keeps showing strength even when poor data from China on future demand and US interest rate decision is still on the line. The commodity plays its own game, according to analysts. Analysts as well see in the near future higher highs for the oil. We might see some profits pull at an early trading session today. However, the upward trend should keep until Friday. Here you can see below the crude oil daily chart. From the left, it was yesterday. We were exactly on the resistance 100 moving average, and I told you that if the API will be poor, will give us poor results, we should see a breakout of the 100 moving average towards higher highs, and that's exactly what happened. So for those of you who took the call options on the crude oil yesterday, probably made a lot of money. That's it for today, guys. If you have any question, you can contact me on binary options reviews and at gmail.com. My name is John Hyaden, and I'll see you again tomorrow.